Good morning, everybody. It is Thursday, March 7th. I'm Jane Johnston with the Bar Hill Group at Remax Combosin, and I'm here with...
Hey, everybody. Oh, let's let Jen start this one.
Jen Lowe, mortgage broker with DLC Modern Mortgage Group.
Yeah, and Andrew Tank here with Vibe Real Estate Group.
Yeah, and Jen is going to be joining us weekly on our show. Yay!
Hey.
Thank you. Okay.
Jen's been a regular contributor and guest, and now we like her so much we're going to bring her in regularly.
Thank you.
Okay. So let's talk about, we're going to talk about real estate, then we're going to talk about the lending rate and what's going on with inflation, and then we'll get into the stats, and we'll go from there. Is that all right with everybody?
Fine with me, folks. It's this is our first of the month meeting, so we're going to talk the last month's stats as well. So that's the key point, as well as Jen's mortgage updates.
Yeah. Okay. So first of all, I keep forgetting this. I'm asking you guys, if you like us, please subscribe to the channel that you're watching on, because we do like to have you present when we're talking out here in the nether regions. Please also, if you know anybody who needs this information, please share it with them. And don't forget to comment if you have any questions. We do like to hear what you have to say so that we can figure out what your needs and wants are. Okay, Andrew, take it away.
I'm still stuck on nether regions, but okay. All right. So March 7th, in the last week, we've had 326 properties go live on MLS, 134 go pending. So that ratio, it's actually has been more half and half. This is actually a little less than half and half, but we're seeing a big spike in new listings. I just want to point that out because I think our pendings are closer. So we'll see that from when we look at the last week. Price decrease is 91, so people are still definitely tuning things up when they're not finding they're hitting the mark. Quite a lot of price decreases show us that there's definitely room to change in the marketplace with some of those listings. Some properties increased in price, which is always a little odd, but that does happen. 4 properties back on market, 120 properties transacted at the land title office, and 71 properties expired and 5 withdrawn. Compared to the week before, 245 new listings the week before versus the 326. So we're definitely starting to see this spring increase in activity in new listings coming on. And so that should see our inventory rising. With the pendings not quite matching that, we should hopefully see some good selection for buyers. Similar price decreases, everything else is kind of not really worth talking about. It's I'd say the big difference is that new listing bunch. What are you guys seeing here?
I was surprised to see how many new listings were on, and apparently at our office we had 50 new listings come up yesterday. So it's just a tail.
Sorry, I just got it.
I'm sorry, my dogs are not settling in my indoor farm. My apologies.
Sorry, Jane, I had to interrupt with that, but you were saying?
So the list to sale ratio this week over last week is 41%. Last week it was 52%. So we're seeing, that's mostly because we're just seeing more listings coming on the market. So, and that's just natural for this time of year. I do find after holidays, things get a little busier. So we've had Family Day so far, and then we're going to be seeing March break and then Easter, and it just, the market just picks up. So I don't think the ratio says that we're heading into a slower market. I think it means we're just getting more listings, so which is good for buyers, and I think we're going to see more subject to sale offers.
It gives us more opportunity for those if the listings are the same amount of buyers or more buyers. We've had an increase in actual properties go pending week over week, but with so much more to choose from, sellers will have to consider perhaps subject to sale.
Yeah.
Would they be more willing to look at that?
Okay, so for the month of February, we had 460 net unconditional sales for February 2023 compared to 386, so less in 2024. And the past week so far, we've had 44 net unconditional sales. And you can see year over year, February 2023 was 460, March was 590. So we're expecting the market to pick up. That's normal. Yeah. We had 929 new listings in February of 2024 compared to 811 in 2023. And again, if we look to see last year in March of 2023, we had 1,118. So expect the number of new listings to go quite high. And then active listings, we are at 2,354, and that's compared to 1970 last year. So
right, yeah, not much of a jump between February 2024 and March 2024, but that would be Feb 2024 at the end of the month, and this is March 2024, 4 days in, because these stats are from March 4th. So so we're definitely on an upward trend. It's just not a skyrocket.
It's seasonal.
Yes, seasonal as expected.
Okay, so Jen, tell us all about what we're seeing here. I remember you did an announcement last month and you were like, inflation rate is going down.
Yes. So the inflation rate is now within the 2 to 3% that the Bank of Canada's been striving for. So that's great. But they still remain extremely conservative and hesitant to reduce rates. From my understanding, it's basically concern about creating a big burst in real estate activity.
And you know what? I mean, I heard this morning that same opinion from the CIBC. What's his name? Ben Toller or something like that? I can't remember.
Benjamin Tall?
Benjamin Tall. Yeah. So, like, it's interesting to me. I agree with that. That was my assumption as well when I saw the hold, is that they're wanting to wait for it to for the market to level out, because what happened last year when they did a dip in interest rate, we had a bit of a push, a run on the market, right?
Yeah.
When we had a hold on the market. So now we've had a hold since, is it a whole year almost?
Yeah. Yeah. They finally stopped raising rates. Has it been a whole year?
No, it's
not since they stopped. No, it's been more 6 months.
Yeah, I think it was November, December.
So the last five announcements, I guess, or so have been steady.
Yeah, and we're all waiting for when they're going to drop.
We're hoping they're going to drop. We're waiting for that. We're praying. Our fingers are crossed. Please drop.
Yeah.
For those of us, I mean, because we have a lot of people coming up on renewal that have been on fixed rates that have been really low, and they're going to be hit when this comes up. And so if it lowers the rates, they're going to be a little bit better off. And those of us on variable rate mortgages are really hoping that it comes down as well. But
yes.
But the Bank of Canada, so a large part of the index, the consumer price index, is the cost of housing. And so when you take that out of there, that takes us well below, like, it's the cost of housing is a high part of the consumer price index, which is what they're basing their inflation on. And yet so if they take that mortgage, if they lower mortgage rates, then they actually would reduce the inflation. But
they're going to increase the price of housing. That's what they're afraid of.
It'll increase the price of housing, and that's what they're afraid of. They feel like it'll just come up. But it's a lose-lose, because they raise the rates, they raise inflation. They lower the rates, they raise the value of housing, and then inflation rises too. So they're not too sure what to do, I assume. Other than
and we're all paying for it.
Yes. Yes.
Yeah. I mean, Our chief economist for Dominion Lending, her name is Dr. Sherry Cooper. And in listening to her yesterday, she said her expectation is June, which has kind of been most people are saying rates are going to start coming down on the variable rate side in June. And that her current expectation is that they're going to come down 0.25% each time the Bank of Canada meets starting in June. So that could lead to 1.25% reduction on the variable rate side by the end of the year, which would be amazing.
They want to temper it with people who will be going into foreclosure, right? They want to stop that.
Because they have seen an increase in the rise in mortgage delinquencies, 30 to 90 days. Yeah.
Okay. When did that increase? Because that's the first I've heard of that. Overall, I've been hearing that they haven't been seeing those changes.
I don't know when it started, but in chatting with, or not chatting, but in hearing from Dr. Sherry Cooper yesterday, she said there has been an increase from 30 to 90 days. So not foreclosure, but mortgage delinquency.
Yeah, so that's
people are late on their mortgage by 90 days more often. Okay, yeah.
So what you can do if that is the case, you can talk to your bank and come up with a plan. And some people have a contingency within their mortgage that if that happens, they can figure it out so that they won't go into delinquency. I mean, it's better to have the conversation than just ignore it, is what I'm saying, right?
Yeah. And I think it's really important.
Yeah, with the insurers. So if your mortgage is insured with CMHC, Sagen, or Canada Guarantee, they have programs to help in financial stressful situations. You have to prove your financial challenges, but there are options.
Jen, I understand that in many of those cases, you need to talk to the bank before you start being delinquent in order to get ahead of it, because once you've been delinquent, you may lose some of those options. Is that true? Or
I mean, communication is always the best. I think, I mean, in exploring your options for sure before it happens, knowing that it's coming down the pipeline, most definitely, as opposed to getting those late payments showing on your credit report. And once it's over 30 days, it's showing on your credit report, and it makes everything more difficult.
Right. Okay.
So it's planned. You need to plan your insolvency so that you are it has minimal impact, because everybody wants you to stay in the house. Really.
Yeah.
Most definitely. And the reality is, if you've got a cash flow shortage each month and you're seeing, unfortunately, that coming down the pipeline, definitely reach out to your mortgage broker or your bank.
And also some people I've seen in the past where, because they've tried to keep paying and paying and paying, they end up in a worse situation. Whereas if they'd gone to the bank in the first place, they wouldn't be in the place where they have absolutely nothing by the end of it.
Mm-hmm.
Yeah.
Okay, so let's go on to the stats here. Oh, hold on a second. All right, total active listings. Go ahead, Andrew.
Well, we're seeing as usual, the seasonal adjustment, the seasonal trend here. You can see from the beginning of this, at February 2022, the rise up of the spring market back in 2022, reaching a peak. Bit of a drop in the summer. This one actually kept going in 2022 because that was 2022. And then the drop off. This is for actual listings, not sales, folks. So just to make that clear, the drop in listings always sort of happens around December. And then again, we've seen in 2023 that slow gradual rise in inventory up into this one just continued on right through the summer into the fall, peaked actually in the fall, and then quite a drop in inventory in November, December. And that's possibly also because I feel like we started to see some more purchase activity. And then we are now starting to see, as we move into January 2024, February 2024, a rise again of active listings, more inventory.
Yeah, and then if we compare that with the total new listings versus total sales, so how this is different is the total listings are those relists that happen every month and also people coming onto the market. So it talks about fresh listings, I guess is a way to look at it. So you can see seasonally, again, we have a bit of a pulse happening in the spring and another in the fall. Last year, everything, because of the interest rates announcements, it got pushed over 2 months. And then we had a bit of a stronger end of the year because I guess the interest rates were fairly steady. But you can see in December, our list to sale ratio was almost 1-to-1. And then coming in January and February, it's being quite slow. So the number of listings to sale here is lower in January. And then it's peaking a little bit in February. And when we look at the ratio here, we can see we're moving more into a balanced market. So from a buyer's market, more into a balanced market.
Yeah, and if you take you go back to that last slide, the line that you see, when I was talking about the slide prior to this, that was just the total active listings, and it was sort of peaking in the summer. This one here, we go to this next slide again, and if you just look at the line, you can see that it really more peaks in the spring, and that's for the sales. Sales are always peaking more in the spring, and then the amount of properties listing tend to be a little bit more scattered, but still follow a pattern. But we are moving into that rising sales again, and I suspect we're going to have a pretty vibrant spring. It feels that way.
Even from the lender standpoint, they always there's always spring rate specials and cash back offers in the spring.
Okay.
Mm-hmm.
I have a question. Do they ever allow you to buy down your mortgage a bit instead of doing cash back? That just seems like a better option.
No.
So in the US, they do that. So you can say to somebody, well, I'll give you $10,000 off, or I'll buy down your rate like 0.25%, which would save somebody way more money over the long run.
Yeah, no.
Huh. Something to think about. This is a great reason to why you need to talk to agents all over and see how real estate is done, because we have it our way, right?
You get our little blinders. This is how it's done in BC, and there's a wider world out there. Although we've got it, I know, based on having been a director of the real estate board and traveled and talked to other boards and seeing how it's done in the States and in Canada and different provinces and different boards within BC. That in Victoria we have it pretty good. We really do. Yeah.
Nice people too.
Yes.
Okay, do you want to do single family homes, Andrew?
Yeah, prices went up, they went down, they went up, they went down, they went up. and now they're still kind of close. If you look at October 2023 through February 2024, it's been kind of just on a line there. It came down from maybe a peak in July of 2023. But if you look at this overall since July of 2022, it's all been pretty steady on the average sale price of a home in Greater Victoria. Came off of a peak in April of 2022.
It's interesting because I was looking at the stats. I was showing somebody how I keep the stats every month in my Dropbox folder. And I went back to 2019 and I could see we were hovering around 950. And this graph is almost the same, but it's like so everyone's asking, like, when is the market going to collapse? Well, we did peak at over 1.4 and now we're around 1.25. So we have come down, and that's about 10%. So
yeah,
the correction has
happened.
And this is exactly what the Bank of Canada is worried about. Like if you go back to 2022, where they dropped the overnight lending rate 1.5%, right? And and just how, like, I mean, that's basically, if you were to put where prime rate was over the last 2 years, it'd be very similar to this. Right?
Interesting.
Yeah, because, I mean, when interest rates dropped, the price point was so you could get that much more for your property. And that's what the Bank of Canada is worried about, really, I guess.
What's funny is when people say to me what their house is worth, and I talk to both realtors and buyers and sellers, and they look at their property assessment, and I'm like, listen, like the market was way different when they did this assessment last year than it is now. Maybe not so much now because it's flatter, but especially 2023 to 2022, like considering what tax assessment is, and it's a tax rate and how it's calculated, it just is not related to property value at all.
That's a consistent, constant, repeating conversation I have with clients all the time. My property's assessed at this. The people up the road sold at this above assessed or below assessed or whatever. So therefore, I should be similar. And, we have to look at a lot more factors than just assessed value. It's one figure, but I put a lot less weight on it when I'm calculating or trying to determine and help people with establishing the value of their home, or a buyer establishing what they want to buy.
I just did a market analysis on a property, and they had finished the basement, which was previously unfinished. So they added probably about 1,200 square feet. And the tax assessors aren't aware of that because you don't need a permit for drywall. So, and carpet. So anyway, okay. Condos, I'll do this one. So it was around 675 2 years ago. It peaked up around there last spring. Now, April and May are good times normally to put your place on the market because we have more choice, because people are moving out of university and there's job transfers, there's military transfers. So just in terms of choice, spring market is great for condos. And we're seeing that it did decrease over the end of last year. Part of this is because I think we had a glut of condos coming on the market who were short-term rentals trying to get out of the market, and they were sitting pretty, not selling. And I think we're starting to see that shift as some of the sellers move into long-term rentals, which was what the government wanted. And others are selling now.
I think that's why condos tend to be, single family homes and townhouses seem to be where where the attention is and the drive and the need. With condos, there's been a lot of purpose-built rentals, buildings built recently. There's still new construction happening in the West Shore. So that competes against the resale price and just the average sale price in general, because if we're going to have more supply of anything, any kind of housing, it's going to be the condo apartment space, and the purpose-built rentals are going to compete against that as well. Whereas we just don't have that same kind of growth in single-family homes and new construction.
That's another statistics from our call yesterday with Dr. Sherry Cooper, is that the housing starts for single-family homes is the lowest it's ever been on record.
I'm not surprised. It's so expensive to build, right?
Yeah.
Yeah.
And Greater Victoria has really, hit all the edges of its urban containment boundary and filled in all the little holes where there's, spaces that you could develop a single family home. What we're seeing now is mostly infill, and it's limited. So the new provincial rules should see us seeing more sixplexes and even low-rise condos, but we're not going to see as much single family homes again, because unless you're tearing down an old one or going really high density, and the numbers just don't work for that right now.
It's interesting you say that, because I've been talking to a buyer from who lived in Victoria 20 years ago, and is moving back, and I was explaining how we saw a huge change in Langford from when I moved here 25 years ago, where really it was single family, one-level homes, and now we're seeing apartment buildings and row townhouses, and the densification is incredible. And he was like, well, what do you think? This is the area just west of Jacqueline and south of Goldstream where there's a townhouse complex going in. And I'm like, well, it's hard to say. It all depends on whether or not the other people in the neighborhood start to want to sell and gentrify the neighborhood south of that area. It's an interesting area because south of it is very commercial. So, and when you talk about where the urban containment boundaries, I mean, we're on an island, right? So I don't think anybody really has a choice but to increase density. There's going to be a lot of pressure on people. There's going to be a lot of value in land right now. That's going to be
true. That's true. But if they're going to go for density, and developers, need to make money if they're going to develop, they're not going to do it just out of the goodness of their hearts. They're going to be wanting to get as much return on their investment, and that for the density that they require, it's mostly condo buildings. It's
right.
Not the same kind of.
Yeah, or low rise.
Or low rise, yeah. Because just the cost of land to put.
Yeah. But what's interesting is during the height of the market, it was really hard to even find one lot. And now there's lots of lots coming up that have the plan all ready for a buyer to just step in and take over. Mm-hmm. So there is opportunity there, but cash is king.
Yeah.
Yeah. Okay, Andrew, you want to take it away for this one?
Like I said before, up and down and up and down, especially with row townhouses, because less of them sell, so the averages tend to skew. So we really need to soft focus this line and take it with a grain of salt. So for example, more recently we see from November 2023 a bit of a peak and then down and drop in December, January. That just could be that there were less sales, and those sales were in a lower price point, and one sale of a $2 million townhouse, and they do exist, can skew that average. So overall, general trend looks kind of, I'd say, flat. And my gut feeling is because of the demand for single family homes, and also again just things I'm hearing and from some of the economists that I was listening to recently, because the single family home market has gotten a little tighter, people are starting to consider the row townhouse option as well, because it's of similar configuration. So I suspect we're going to see this average price on the uprise. And that's this last January or February. Again, it could have just been an averages thing, but that shows quite a spike back up to where it was in November 2023, and I suspect we're going to see it continue up.
Also, I'm seeing the quality of townhouses really increase. Like compared to when we got into the market, there were these crappy wood frame things with weird layouts, and now the layout is better. They're accounting for things like parking and ease of accessibility. I especially downtown in Victoria, the city of Victoria, there's some really nice townhomes, like on Richardson or Richmond and Rockland area.
You're talking new construction ones, or are you talking just
like since 2000?
Yeah.
Yeah.
And in the West Shore, the West Hills, and up at South Point, there's a lot of townhouse. Kettle Creek area. There's some big townhouse developments that are really just purpose-built, big row townhouses, and they fit that middle ground for people who do not want to be in a condo. They want to have their own garage. They want to have a little more space than a condo generally affords, but they don't mind having a wall on either side of them and the neighbors that close together, because for their affordability, they're willing to make those compromises in order to get that kind of shelter. So it's a good, as I said, a good middle ground.
The only thing I feel that's lacking in those in Langford is they have aligned the windows. So when you're looking out your window, you're looking directly across the street into somebody like who's a mirror image. It's
Yeah.
not just offset a little. So
It would have been a smart thing to do, I guess. I mean, even if it's offset, you're still going to be looking into some windows, but that's a smart thing to do. You got to be really careful, folks, to get to know who your neighbors are going to be across the road. So decide if there's something you want to be looking at or not. It's really, really important to do these kind of investigations before you finalize on your purchase.
yeah, and look at where the house sits in relation to the sun and what kind of light you're going to be getting during the day. Like, I think it's so important. Anyway, okay, this is my favorite matrices. Okay, I'll do it. Okay, there were 214 units sold in in February of 2024. The average price was $1,262,000. That's up 3.5% over last month and down 1.8% over last year. And really, that's all we need to say. Thank you. The median was $1,047,000 for the month of January, and last year it was $1,000,000.1. So we're just down a little bit. I'll go down to condos. So 152 units were sold in February 2024. That's up 35.7% over last month and down 5.6% over last year for condos. The average price was $596,896. That's up 2.9% over last month and up 3.1% over last year. And the median was $535,000. So that is down from last month of 540. And units sold in February of 2023 were 161, which is interesting compared to 152. So pretty even actually overall. All right, row townhouses, 68 sold in February of 2024. That is up 88.9% over last month in January and up 51.1% over last year. And the average was $848,000 for a row townhome in Greater Victoria, and the median was $799,000. Last month, the average was $712,000. So we are up month over month, and the median is down, or also up from $700,000. Mm-hmm. So units sold were 68 for February of 2024, and for February 2023 there were 45. So that's interesting to me, and yeah, that basically covers it.
Thank you, Jane.
I like it because I like to look at the numbers and I can see the trend. I also like to look at median because it tells me where the market's heading. So median usually shows that it's coming down a bit. If it's less than the average. So yes, thank you, Erica Tucker. Anyway, we're gonna have a bit of a rock and a roll ride this year, you guys. What do you think? I think it's gonna be a pretty good market. What are you thinking, Jen?
Yeah, I'm just waiting for it to start. It's kind of, right. Like I feel like where the starting point kind of keeps getting pushed. Right. From mortgage renewals, I'm very busy with mortgage renewals this year. And lenders are very aggressive right now to keep their book of business.
I guess, for mortgage brokers, it's sort of a lagging indicator, I guess, is I don't know if that's the right word, but we're out, you're going to pre-approve people, but just like we do, we talk to people all the time who are saying, I'm thinking of buying, can you set me up on a search? But they may not be really active until they, once they engage and start getting active, they're going to probably, after they've talked to you and talked to us, they're going to circle back to us, to the realtor, start looking at properties, and you're going to hear from them again when there's an accepted offer.
Mhm.
And so for you, you're kind of waiting for us to get our job done.
Yeah, but she meets them before they actually start searching, so she
She does.
knows what's coming down the pipe. People
Mhm.
really start when they meet with you, they're really getting serious, right?
Yes. Yep. And I am, because we're in a declining interest rate environment on the fixed rate side as well, definitely making sure I'm communicating, because there's pre-approvals that I did set up in January that now that fixed rates have dropped, I'm able to potentially pre-approve them for more now. So I'm communicating with those people as well. But
I have a
yes.
question. Um, so this is just means I don't need to ask it right now, but just understand I have a question. When you're saying that lenders are being aggressive on maintaining their book of business, how is that showing up?
Just the rates they're offering, like it makes it to the point. So when your mortgage is up for renewal, we're looking at it's an opportunity to check in. Have you, do you want to do any renovations? Have you incurred any debts, given we're in a really difficult, it's been a tough go here, with the cost of everything. Do we want to consolidate some debts, et cetera? And if you're just literally wanting to do a straight renewal for your mortgage, we can also explore other lenders as well to see what your best option is. What I'm just seeing right now is the rates we're getting, the initial rates we're hearing from the client's current lender is surprisingly aggressive. Usually they start, it's a game. And what they start offering from the beginning is usually not as aggressive as what I've seen recently.
So aggressive is good.
Yes. Yeah.
Yes.
Yep.
Okay. Yeah.
When you're saying that though, so let's say I go to see you and I want to renew a mortgage on a property and they're giving me what would be a good rate right now?
Prime -1 for a variable.
So that would be 4%?
For variable. Nope, prime 7.2. What gets confusing is you've
Oh,
got the
right.
Mhm.
overnight lending rate, which is the 5% that's set by the Bank of Canada, but the banks set their own prime rate. And for the most part, the bank's prime rate is 7.2. One bank, TD, their prime rate for mortgages is actually 7.35.
Wow, that is so expensive.
So
So
remind us like how, so the bank sets their own rate, but they all do tend to follow in some way, like as the Bank of Canada rate rises or falls, they tend to follow. Is there always
yeah,
that level of gap between like that,
well
currently
then,
Bank of Canada's 5, they're 7.2. Is there
yeah.
always like a
So these
2
set the
point
prime
something
rate.
gap?
What changes is the spread that you have off of prime. So if you've got a rate of prime -1, your rate is 6.2. And just going back to TD, they can advertise prime -1.15. So you think that that's the best, but it's actually the same as what all the other banks are offering. So definitely another consideration. The other interesting thing we have going on in the banking world is HSBC is being taken over by RBC, and that's happening kind of, they're doing the transition right now. HSBC was in the broker space, RBC is not, and they're planning on not continuing, or they're not going to be in the broker space anymore.
So private lending, not private lending, but there you have to go directly to the bank. You can't go through a broker.
If your mortgage is with HSBC or RBC, you have to go to RBC. They're obviously acquiring a lot of business from HSBC, so I'm very curious how that will affect how aggressive they are on their renewals.
Mhm.
Hmm. What banks do you recommend that people work with for just banking in general? Like what are the easier banks to work with? I know this might be a weird question, but you did
Yeah.
work at one before.
Well, and yeah, I worked at TD and RBC. Honestly, from an online banking standpoint, I love Scotiabank. I like their online banking the best. RBC is really user friendly. Actually, this is ridiculous. I bank with HSBC as well. Jeez. Honestly, I would say I prefer Scotia and RBC from a day-to-day banking standpoint.
I've been banking with Coast Capital for years, and I found in the last little while we had an experience where we wanted to go in and just add a line of credit to our joint account, and I was trying to do it online. Can we just add a line of credit, and can you set it up? And they was like, no, you got to come in. And that's fine. So we made an appointment to go in, but then we got in and they asked us all this additional questions and wanted to know if we wanted to bring our mortgage over and all of this and all of that. I'm like, can we just get to doing what we want to do? And, something that should have taken 15 minutes took, an hour, and we were pissed. We were actually angry because we don't waste our time. If we're going to bring our business over, we will. But it was, it shouldn't require that much, and all of the information they were asking for, they should have already had on file. And so we've been finding that over the years. Different banks, I guess, have different services. It's interesting to hear about Scotia. It's really hard to make a move when you've got all of your banking sort of set up in a certain way.
Well, the challenge is it is so frustrating. Like you can't just call your bank. You can't. There's no calling and speaking to whoever you opened your account with. That just doesn't exist.
Yeah.
It
doesn't happen anymore.
So then it's the online services is where, if it's easy to, open up a credit card or set up a line of credit online, that's much preferred. Coast Capital, they're online. I do work for the Junior Shamrocks, and we have the banking through Coast Capital, and their online system is archaic. It's so old and slow, and yeah.
And the tap on my card works half the time, if that. And people are always seriously that people know it's known. You go out and you try to buy something and you just do tap, and they're like, "Oh, that's a Coast Capital," because it'll fail. Oh, that's a Coast Capital card. You got to insert it.
Wow.
Beep. Okay. Now that we've gotten totally off topic,
Off track.
Jen, how do people reach you?
Yeah, my number 250-217-4925. I'm at Modern Mortgage Group, and my email is j.lowe@dominionlending.ca. Website, jenlowe.ca. And I apologize. I hope you got a little bit of entertainment by my snoring dog beside me and my cat's tail trying to join the show as well.
No worries. Andrew, how do people reach you?
Reach out at 250-360-6106. Email me info@andrewplank.com, and I'm on Instagram as plankandrew. I have a website, andrewplank.com. It is just my name. Come and check it out. And Jen, I did not hear any snoring.
Oh, yes.
Yeah.
Can you hear the noise behind me right now? Okay, good. All right, my name's Jane Johnston. I'm with the Briar Hill Group at Remax Camosun. You can reach me at 250-744-0775. My email is briarhillgroup@gmail.com. My website is briarhillgroup.com, and you can see these shows and more on each of our YouTube channels, by the way. And you can follow me on Instagram at realtyteacher_Remax_Victoria, or go to the Briar Hill Group. And don't forget, we are on every Thursday morning at 9:30. So please tune in and subscribe. We'll see you next Thursday. Bye, everybody.
Bye, everybody. Thank you. Thanks, Jen. Thanks, Jane.